Ladies and gentlemen, it is that time of the year once again. We have two gladiators jumping into the Coliseum. In the right-hand corner, Colombia. In the left-hand corner, Venezuela. This is Tax Wars. Who will win? Who will fail? Stay tuned. Hello everyone, this is Javier Correa from Nomad Capitalist, and today we're going to be talking about two epic countries, Colombia and Venezuela, countries that were both liberated by Simón Bolívar, countries that both speak Spanish, countries that both claim the arepa is theirs. But in terms of taxes, how similar and how different are they? That is the subject of today's epic tax battle in the context of tax wars. So let's start. Number one. Both of these countries are worldwide taxation systems, meaning that in both of these countries, if you are a full tax resident, you will pay tax on both your foreign and your locally sourced income. So first battle is a draw. Second, let's talk about tax treaties. While Venezuela has a strong, robust, and well-developed network of tax treaties, Colombia has a small, developing network of tax treaties. Now, Colombia is heading in the right direction by signing an increasing level of tax treaties, and it is expected to increase its number in the coming years, But as of now, Colombia has a limited selection of tax treaties that includes certain countries such as Spain and France, for instance. Canada is also on that list, but for example, the United States is a notable exception. In the case of Venezuela, there is a much more developed, much more robust, much more broad network of tax treaties that includes, very notably, the United States of America. Actually, Venezuela is one of three countries in the region, along with Barbados and Mexico, that has an active tax treaty with the United States of America. Venezuela also has tax treaties with some of the emerging countries of the world. So if you're looking to invest in places like Malaysia, like Indonesia, then definitely Venezuela is a place to look into, because it has tax treaties with those two countries and other countries in that region. In addition to that, if you're looking into investing into other markets in Europe, then Venezuela does have a big advantage over Colombia, having tax treaties with countries like Austria, Belgium, as well as Germany, that simply do not have tax treaties in place with Colombia. Again, this may change in the near future or in the coming years, but as of now, definitely a clear advantage for Venezuela on that point of tax treaties. Now, let's take a look at CFC rules, which is something that is very important for all you nomad capitalist investors and global entrepreneurs out there. Now, Colombia does formally have controlled foreign corporation rules that specifically target passive income. That means that if you're a tax resident of Colombia and you have an offshore company that runs an active trader business, you should be largely okay. However, if you are an investor and you're using your offshore company to hold investments, stocks, bonds, crypto, and the income is essentially passive, then you might have some issues in Colombia, as due to the nature of their CFC rules, you will be likely required to have that income included in your personal tax return in Colombia, regardless of the fact that you distribute dividends out to yourself or not, right? So Colombia, tricky for investors, I would say, not a good place for investors in that sense. If you're running an active business and you manage to avoid essentially having a permanent establishment in Colombia, then that might still work. Now, let's take a look at how that same situation would unfold in neighboring Venezuela. In Venezuela, there are no controlled foreign corporation rules per se. However, there are some rules that are dubbed the International Fiscal Transparency Rules, which are more or less the equivalent. However, their scope is much less broad than Colombia's CFC rules. So Venezuela's international fiscal transparency rules have some very specific, basically conditions that have to be met. Number one, it only targets passive income. So just like in the case of Colombia, if you have an active business that is being run through an offshore company and you're a Venezuelan tax resident, you're in the clear. Provided that you don't have a permanent establishment in Venezuela, you can safely retain earnings in your offshore company, regardless of the level of tax the company itself is subject to overseas. So when we're talking about passive income, this is where Venezuela holds an advantage over Colombia. So in the case of Colombia, as we established, any type of passive income held in a foreign company is essentially taxable in Colombia. And in the case of Venezuela, the situation unfolds as follows. So basically, in the case of Venezuela, passive income that is held inside of a foreign company that is incorporated only within a jurisdiction that is within the blacklist of jurisdictions in Venezuela will essentially be taxed in the country. And again, this can be avoided by having the company incorporated in a jurisdiction with which Venezuela has a tax treaty. So what does this sum up to? This means that if you're in Venezuela, you're a tax resident and you're an investor, and you either form a company to hold your investments in a country that has a tax treaty with Venezuela, or avoid establishing your company in a jurisdiction that is located on the blacklist provided by Venezuelan tax authorities, you should be fine. So what does this all mean? In Colombia, you're okay if you're running an active business offshore. In Venezuela, you're also okay if you're running an active business offshore. However, if you're an investor and you're just running a company offshore that serves as your holding company, as the vessel for your investments, you're going to be in some trouble in Colombia. Not a great place to be. But in Venezuela, easy enough to avoid. You just have to pick the right jurisdiction, and you should be good to go. So Venezuela does have a point here when it comes to CFC rules and being able to retain earnings in foreign corporations. Now, obviously, in many countries, a big concern is the wealth tax. Now, the wealth tax is very controversial. Many countries around the world have tried it, have taken it away. But in the case of both these countries, they both have a wealth tax. Now, that sounds terrible. But again, the way in which each one of these countries basically has developed and has implemented the wealth tax varies a great deal. In the case of Colombia, you can say the wealth tax is pretty automatic. Once you reach a certain threshold in terms of your net worth, then you automatically are liable for Colombian wealth tax on your worldwide assets. No questions asked. That is the way it works, period. In the case of Venezuela, there is an advantage here because in Venezuela, while you do have a wealth tax that is active in the country, you not only have to meet a minimum net worth requirement, but you also have to be specifically designated by the Venezuelan tax authority as a special taxpayer, what we call locally un contribuyente especial, in order to be liable for the wealth tax. So this means that it is possible to be very wealthy in Venezuela and simply for one reason or another not be selected to be a special taxpayer, and therefore you can be very wealthy and not pay and not be liable to pay the wealth tax in Venezuela, whereas in Colombia it is much more difficult to avoid. In addition to that, I would also note that the wealth tax in Colombia can go and is levied at rates that can go up to 1.5%, whereas in Venezuela, the rate is 0.25%. So the top rate in Colombia is about, if my math is correct, 6 times higher than the rate in Venezuela. So here, another clear advantage for Venezuela in terms of tax. Not only is the rate for wealth tax lower, it is also much more difficult to be liable for wealth tax in Venezuela. In terms of local taxation for local investments, obviously, most of you watching this video, if you're Nomad Capitalist, you're thinking about relocating to a South American country, potentially to establish your own tax residence, not to necessarily invest in those countries. But you should keep in mind that there are differences when it comes to Venezuela and Colombia. I would say one of the most notable differences would be, for example, in terms of capital gains. Venezuela has a very interesting incentive whereby if you invest in local shares, and there is a local stock market in Venezuela, there is a stock market in Caracas, there are some pretty interesting companies that are listed there. Not that many, but you can find some interesting opportunities. But point being, if you are a tax resident of Venezuela and you invest in the stock market, you can be taxed on capital gains at a rate that is as low as 1%, provided that the companies are publicly traded. The equivalent in Colombia would add up to a tax rate of 15%. So here, I would say a slight advantage for Venezuela for what it's worth, because we do acknowledge that obviously it is a very small securities market, so it's not like you're going to be investing millions there anyway, but it is interesting to mention. The other point that is interesting to mention is if you do decide to start a local business, for example, for residence purposes, in the case of Venezuela, if you're a Venezuelan tax resident and you have a local Venezuelan company and that company distributes dividends to you from profits that have already been taxed at the corporate level in Venezuela, then you can receive dividends essentially tax-free. So that happens with dividends that come from publicly traded companies as well. If the companies that are listed on the Caracas exchange, for example, distribute dividends to you from profits that have already been taxed at the corporate level, then those dividends will reach you tax-free. Unfortunately, in Colombia, they do have a very well-established system of double taxation. So profits are taxed at the corporate level, and then you are taxed individually at the personal level in every instance. In Venezuela, this only happens in the case of foreign-sourced dividends, not in the case of locally sourced dividends. So slight advantage for Venezuela here as well. Now, it is important to note that lifestyle and obviously the ease of doing business is also very important, and here Colombia holds a clear advantage. Not only can you more easily fly and travel the world if you're based in a place like Bogota, Colombia, than Caracas, Venezuela, but also there is a question of image. Nowadays, it is much easier to present yourself as a business person that is based in Colombia as opposed to a business person based in Venezuela. Venezuela does have certain restrictions, not as many as people think, but there are some restrictions placed in terms of sanctions, especially if you are doing business or somehow related with the oil sector or something to do with the government, then that can be delicate. In Colombia, there are no major active sanctions to be worried about. So that is definitely something in favor of Colombia. In addition to that, when it comes to cost of living, here, if we compare specifically the two capital cities, Bogota and Caracas, here Colombia again comes at an advantage. Caracas being fully dollarized, cost of living has gone up. So if you decide to become a tax resident of Venezuela, then definitely your cost of living will be slightly higher than if you decide to go to Bogota, for example, where the peso is still widely used, and you might find that your cost of living in euros or dollars is actually quite low. So overall, advantages for both countries. I think that if you look at it in terms of who won, you will find that as established in other epic tax battles and other tax wars, the answer is it depends. If you're a global investor and you are only worried about your tax exposure, then I think Venezuela definitely has an advantage with more tax treaties, more comprehensive CFC rules, and more ways to defer taxation. However, if you are a freelancer and you need to constantly travel back and forth and meet clients, then definitely Bogota or Colombia in general is an easier place to be based in. But you know what the cool thing is? Here at Nomad Capitalist, just as I've said in other videos, you can find expertise on both of these countries. We've helped clients inquire into investing in Venezuela. We've helped clients obtain residence in Colombia. And we have the full capability to help you and assist you with regards to both of these countries, as well as the rest of Latin America and the rest of the world. So if you're ready to explore which country might be right for you in terms of business or tax residence, be sure to give us a call or to visit our website, nomadcapitalist.com/apply. Subscribe to this YouTube channel, follow us on Instagram, and I'll see you in the next video.